Welcome back. It's 27 before 5. If you are just joining us, you're watching the Today Show here on eNCA. Don't expect any good news when Stats SA releases unemployment figures for the first quarter of this year on Tuesday. Now, the current rate is 32.6%, translating to 7.8 million people who are out of work at the moment. This has a dire impact, of course, on the country's turbulent economy. Chris Hattingh, head of policy analysis at the Centre for Risk Analysis, joins us now virtually in Johannesburg to discuss this further. Chris, we did see quite a bit of a dip in these numbers sometime in the first quarter of 2022. What's the picture like right now?
Good afternoon, William, and good afternoon to the viewers. Given the main pain point that is consistently higher stages of load shedding, we don't foresee that the unemployment rate will have improved in any notable regard for the first quarter of this year. Of course, I hope to be proven wrong in that regard, but just given how much pain is inflicted on business activity, on just economic activity from the lowest levels to the highest levels throughout the first quarter of this year, because of higher stages of load shedding, we could see a slight uptick in the unemployment rate, especially for sectors like mining and manufacturing. Mining output has done a little bit better earlier this year than one initially thought. Maybe that would then be reflected in the employment numbers in that sector as well. But as we stand before the numbers come out, we think there's likely to be an uptick in that unemployment rate for the first quarter of this year.
And obviously, Chris, this is likely to scare away anyone who's looking to invest in South Africa, yes?
Absolutely. The load shedding, the sort of transport infrastructure issues, now the diplomatic fallout between South Africa and the US, these all ratchet up the country's risk premium. And in a global context of higher risk, higher inflation, stickier inflation, higher interest rates, local and global investors look for where they could get a better return on investment. And that might mean they look at other emerging markets. For example, they could still be willing to take on South Africa's risk. One hopes that they would still invest in building businesses in the country. But for now, I think many issues are concerning investors across the board, and even added into that, the crime and security question, where you wonder whether those are being taken seriously enough by national and local police forces across the country. That could impact again on business confidence and that sort of willingness that you take that on. Of course, there's never 100% guarantee on your investment, but at least you want some measure of stability, transparency, and security.
And of course, Chris, we've seen the Minister of Electricity just visiting various businesses around the country who are complaining, obviously, that the load shedding impacts their business operations, the value chain, if you will, greatly. I imagine they would have liked to assist in some way in employing people, but they cannot, especially in the climate that the country finds itself in. Half a day, which is half a day of productivity, is spent in the dark. Absolutely.
I think even international companies like Toyota, for example, that has a big presence in KwaZulu-Natal, they would jump at the opportunity to open up more factories to get more exports going, especially to markets like the US and Europe in terms of automobiles. Other international companies as well really want to come, I think, and invest in South Africa. They see the opportunity of investing in South Africa and sub-Saharan Africa more widely. You mentioned quite correctly value chains and supply chains. South Africa is still a very strong presence in sub-Saharan Africa. This is a great way for international companies to get in and invest and create jobs throughout South Africa and the rest of the sub-Saharan region. As you mentioned, the electricity minister mentioning visiting different businesses around the country. Last week, he also mentioned the job losses as a result of load shedding. And in his view, and I'm guessing government's view more widely, last year, just around 650,000 jobs lost as a result of load shedding. In his view, if load shedding continues at the higher stages, which is likely to be stage 6 and higher, that could mean 850,000 plus jobs being lost this year, which again feeds into the average South African's feeling of resentment, of frustration with the status quo, and that could increase the risk of things like protest action, violent unrest as we head throughout the latter half of this year and into a general election next year.
Sure. When you say 850,000, Chris, I mean, that's a huge number. I imagine it will spike what the stats say will release tomorrow, those numbers, right? Let's talk about those numbers. I mean, there's like 60% of young people who are currently unemployed. Surely that number will worsen.
I think so. When one takes the twin factors, as it were, it's more complicated. There are more things. But if you just take load shedding and the country's issues in the education sector, one asks the question, are we equipping young South Africans with the necessary skills to be part of an integrated global market and workforce? Perhaps not, if you look at how many students are lost throughout their 12 years of schooling, those who do not make it to university. Where do they go for their employment opportunities? Is there enough in terms of technical certificates, technical skills, colleges, that sort of thing? Could there be a priority there, for example, not just saying that you should only go to university? Maybe there's other options for students who don't find resonance with that particular path. But I definitely think you're right to point out what it might take for the sort of thing to, conflagrate, to really explode. Because with such a high unemployment rate amongst the youth and lower prospects for them, for their futures, where does that energy, that frustration go? It might manifest in something like social unrest.
And my parting shot to you, Chris, obviously within that number, there are those who are unemployed but are qualified. They have degrees, they have diplomas, they have some form of a higher education certificate that they've obtained from an institution, but they cannot find employment. What of them?
No, absolutely. And that could be reflective of, for example, a lower gross fixed capital formation where you just don't have the building of new businesses, the sinking of mine shafts, the real engines of the economy that would create new job opportunities. So again, what happens to those people? Do they try and find work overseas, perhaps work remotely? Again, that could be impacted by something like load shedding. It's one thing for middle to upper middle class people having backup generators, solar, UPSs for their Wi-Fi routers. But for many people that can't afford that sort of thing, could they then work remotely or not? Where do they go for their opportunities? Maybe coffee shops are going to see the biggest uptick in employment and economic activity because you need to make some sort of plan to earn an income if it's for someone local or international. But I think you're exactly right to point that out. Where do those people with those skills, where do they go? Do they try and work here remotely or do they look to immigrate? And then we lose them as part of the tax base of South Africa.
Chris Hattingh, thank you so much for your time this afternoon here on the Today Show. Obviously, those numbers come out tomorrow and we'll wait to hear what Stats South Africa has to say with the unemployment rate in South Africa, what that picture looks like at the moment.